Hello and welcome to Global Insight, Arirang's flagship daily interview news show. I'm Oh Soo-young. For the next 15 minutes, we're going to spotlight a topic that's been making headlines in Korea and around the world. Well, we continue to see ripple effects following the United States Federal Reserve's announcement of another interest rate hike of 0.75 percentage points, lifting the target range to between 3 and 3.25%, the highest level in 14 years. Now, around 40% of the world's transactions are made in dollars, according to the International Monetary Fund. So it's virtually all economies, not just emerging ones, that are at risk of a major blow to their businesses and households, as price levels and debt levels both rise. There are concerns, though, that the Fed's rate will go even higher to the 4% level as US policymakers chase inflation. So just how far will Fed go, and what will be the impact across the world economy where many nations are grappling with macroeconomic vulnerabilities? Now, we invite two guests to get some insights into these questions. We're first joined by Randall S. Krosner, Professor of Economics at the University of Chicago Booth School of Business, and Soo-young Song, Professor of Finance at Chungang University's College of Business and Economics. A very warm welcome to you both. And well, beginning with you, Professor Krosner, first of all, thank you for joining us. It's an honour to have you on our show. And well, first, there have been a lot of question marks recently over the months around the health of the US economy, as there are these lingering recessionary fears, even amid very strong job figures and persistent inflation, of course. So what is your view? Do you think the American economy is on the verge of a recession, and would the short-term pain bring long-term relief?
Well, certainly the economy is going to be slowing. The unemployment rate, which has been near record lows, is undoubtedly going to be moving up. The Federal Reserve has been tightening since March. And I'm at University of Chicago, so I'll quote a great University of Chicago economist, Milton Friedman, who has very wisely said that monetary policy has impact with long and variable lags. So most economists think that's in the range of like 6 to 18 months. So we're really only going to start to see the full force of the Fed's tightening over the next year or so. And so I think the unemployment rate, which is now below 4%, is likely to go, well, certainly it'll be above 4%. I think it may even go into the 5% range. Will the economy have a formal recession? I'd say that's likely, but not certain. It'll depend not only on what the Federal Reserve does, but also on choices by Mr. Putin and by other shocks that may come to the international economy. So I think undoubtedly the U.S. will be slowing. The job market will slow. I think the Fed will continue to raise interest rates, and that will have an impact over 2023.
Professor Krosner, there are a lot of economies in Europe, here in East Asia as well. They're getting very nervous about these planned, what seems like planned rate hikes by Fed. And well, how are the Fed's continual rate hikes affecting both advanced and developing economies in very major ways?
Well, certainly one of the most important impacts is the rise of the dollar, because the Fed, although very slow to recognize that the inflation was not transitory, was not unique among central banks in being slow to do that. But once it had realized that this is not transitory, they've moved much more rapidly than other countries. And that's one of the reasons why the dollar has strengthened so much, because the returns in the US are higher than in other countries. Also, because the energy price volatility and the shocks from Mr. Putin's war in the Ukraine have less of an impact on the U.S. than, let's say, Europe and many other countries that are primary oil importers, because the U.S. is now a hydrocarbon exporter. And so the Fed's choices are going to continue to keep the dollar strong, even as other countries catch up. And obviously that will have an impact on inflation in those other countries, because imports will be much more expensive in other countries. It's helping to tame inflation a bit in the U.S. And it's also going to ultimately help exporters from other countries, because their currencies are so much less expensive relative to the dollar.
Well, Professor Song, now bringing you into the conversation, it seems that the Chinese are very unhappy about the continual rate hikes. Their media, they've been publishing some very acerbic words for US policymakers. And while China's economic performance, though, it's been much more disappointing than imagined at the start of the year, when prospects were largely optimistic growth-wise. And, well, riddled with what seems like will be slower growth, also household debt, risky loan schemes, and, of course, the property market being in trouble right now. What's your outlook, Professor Song, for the Chinese economy? Just how much trouble is it in at the moment?
Yeah, currently the Chinese economy forecast has varied a little bit widely because Asian Development Bank has made a forecast about 3.2% or 3.3%, and also just yesterday, the OECD interim outlook has made a forecast about the Chinese economy has shown 3.2% GDP growth, whereas the World Bank just some days ago has announced that Chinese economic outlook is much worse than expected, which has shown the 2.8%. So, to that regard, I think the Chinese economy has clearly faced some difficulties in upcoming days, but the political issue has been taken the primary stage in China. Also in, I think that is true, that's the case for United States, but particularly in China, the Xi Jinping's position is quite important. The situation is quite important and very critical. So to that regard, the Chinese government maintained some total block of the COVID-19 pandemic. Around the world, actually, there are three crises has been prevalent right now: the ongoing pandemic and the Russian-Ukraine war, and the climate change has turned out to be a reality. But in China, most important one is, I think, the political issue. That's why they just maintain the lockdown, and then the economic performance is worse than the projected one in 2022. However, in 2023, there is some bounce back clearly. So that is what I expect.
Professor Song, well, how would further US rate hikes affect the Chinese economy, starting with the yuan? Do you think the Chinese government is going to keep it steady against the dollar, or do you think it's going to let it fall?
We can see.
Oh, sorry.
Sorry.
Oh, sorry. Why don't you go first, Professor Song, and then?
Yeah, relatively, actually, the Chinese yuan has remained stable even despite some hike of very steep hike of the interest rate in the U.S. But most of the world, the other countries, has suffered so much from some interest rate hike in the United States. So this looks like some synchronized, some reverse currency war. Just a decade ago, we are concerned about the currency war, which was the depreciate against the U.S. Depreciate the own currency value against the U.S. dollar, and then it helps export to the United States. However, right now, despite some hike of the U.S. dollar value, still so many countries have suffered from the exporting and also very increased oil price and the commodity price, and then most of the countries have suffered from that. So that is why we are concerned about the synchronized interest rate hike could actually facilitate and expedite the upcoming recession.
And Professor Krosnow, I'd like to hear your thoughts on this as well. The Chinese media, they've just been slamming the US for the growing exchange rate for the Chinese. And, well, it's clear that they are quite worried. But at the same time, they're saying that they're going to pursue an independent policy. So, well, again, same question to you. How how would a possible recession, how would a possible rate hike, continual rate hike in the US affect the Chinese economy? And what do you think Chinese policymakers are going to do in response to that?
I think clearly we've been seeing downward pressure on the yuan, although they've been trying to maintain the exchange rate. It has been moving down just very, very incrementally. But you can see that recently the People's Bank of China made it more difficult for people to be able to short the yuan and make it more expensive to do that. So they've been trying to use means to slow any downward pressure, but the downward pressure is going to be there. The Chinese economy has slowed significantly. The People's Bank has already cut interest rates and cut reserve requirements. So in contrast to what most other central banks around the world are doing, and so that tension is going to be there. Easing in China on monetary policy, tightening in most of the rest of the world, and particularly in the U.S. So something's got to give. At some point, either they will have to do a lot of intervention, a lot more intervention that they've been doing to maintain the exchange rate, or allow it to go. But I agree very much with Professor Song that I do think that the Chinese economy is at a much lower growth phase right now than it has been in the past, and I think there are headwinds going forward because of demographics. One of the reasons that the Chinese economy had been growing so rapidly for so many years is there were literally tens of millions of people coming in from the informal economy into the urban areas and into the coastal regions. And that is a very important contributor to economic growth. The Chinese population is now going to be aging very rapidly and be aging even more rapidly than the Japanese population. And so that means there's not going to be as many people coming into the labor force. And that is going to weigh heavily, independent of the short-run cyclical factors related to housing markets, et cetera.
Professor Cross-Noel, when do you think the US Fed will start winding down its pace of rate hikes? And do you think a soft landing is still possible?
So I wouldn't want to exclude a soft landing, but I do think that it's not very likely at all. I think the unemployment rate will be going up. I think growth has already slowed a bit in the U.S. and will likely slow further. But I think that the Fed, as Jay Powell has said, we're going to keep at it until the mission is accomplished. After the Fed meeting at the end of July, people didn't seem to believe him. And it took all of August and repeating by him and by other members of the Federal Reserve, we're going to keep doing this and we're not going to pivot. We're going to keep interest rates high through 2023. And then they put out their forecast for 2023 and made it clear they're going to do that. That's what's caused a lot of tumult in the markets, because the market should have discounted this earlier, should have taken this into account. They only seem to have realized it now. So I think the Fed is going to keep raising rates, get into between, let's say, roughly 4% or so by the end of the year, between 4.5% and 5% through 2023, and keep it there through most of 2023 until they're convinced that inflation is getting back towards their target of 2%.
Professor Song, before we go, in this part of the world, we're still quite traumatized by what happened in the late 1990s. And well, how should East Asian economies, particularly South Korea's, really prepare for an even stronger dollar?
Actually, Professor Randall has mentioned a very important point for the Chinese economy. That could be some kind of lesson to Korean economy also. I believe that the Chinese domestic economy suffered so much from this. Now the real estate price bubble has burst out, and then the real estate domestic economy has turned out to be a very risky situation right now. That's why the People's Bank of China decided not to raise the interest rate. Rather, they considered lowering the interest rate because of the too much impact out of the real estate market. The same could be the case to South Korean economy. Relatively, the Korean economy's inflation rate is lower than the US and or European countries, clearly. So because Korean economy's inflation rate is mainly due to the commodity price such as oil and natural gases for the electricity, So that's why that is going to be a little bit, I believe that is transitory. So to that regard, Korean Bank of Korea should be very prudential in increasing the interest rate hike, because that could exacerbate the situation in Korean domestic market, particularly the real estate market has shown a little bit decrease of the price. And also the household debts has been, even though it has reached the highest point in the last year's July in Korean market. However, even though it is declining a little bit, still it is very relatively, the Korean government's fiscal debt is very low in comparison to other countries. Even we have just 50% or so, whereas the United States has reached already 98%. 98% in the Japan has 240% also. So to that regard, the Bank of Korea should be very considerate and prudential, and our fiscal department in South Korea, they have to reconsider and then how to tackle the issue of the inflation. That should be that they must have a nuanced approach to inflation.
Well, we certainly hope that the financial authorities here do listen to you, Professor Song. And well, I'm afraid due to time, this is where we're going to have to wrap up today. And what a privilege it was to have you both on our programme. Randall Krosner, Professor of Economics at the University of Chicago Booth School of Business, and Soo-young Song, Professor of Finance at Chungang University's College of Business and Economics. Thank you both again so much for your insights today.
Yeah, thank you.
Bye-bye. Thank you.